Identifying chart patterns is simply a system for predicting stock market trends and turns. Hundreds of years of price charts have shown that prices tend to move in trends. A trend is merely an indicator of an imbalance in the supply and demand. These changes can usually be seen by market action through changes in price. These price changes often form meaningful chart patterns that can act as signals in trying to determine possible future trend developments. Research has proven that some patterns have high forecasting probabilities. These include the cup and handle, flat base, ascending and descending triangles, parabolic curves, symmetrical triangles, wedges, flags and pennants, channels, and the head and shoulders pattern. In my opinion, these are some of the best patterns to trade. In the past, we've talked about some patterns including the V formation, the W formation, and the cup and handle. Today, we're going to talk about the head and shoulders formation. So let's take a look. So this is a chart from Northman Trader, and it's of the NDX, or essentially the NASDAQ. In the upper portion of the chart, we have what I believe is the RSI. It's not labeled, but I believe it's the RSI. And in the lower portion here is just simply the price chart of the NDX. And the important points to go over is in a head and shoulders pattern, we have the middle pattern here is the head, and on the left is the left shoulder, and on the right is the right shoulder. And then we have an upward trend from the left shoulder to the head. In the RSI, in that same time frame, we have a downtrend moving here. So there's a divergence. And the problem is if the RSI continues to deteriorate through here, and then in the pattern on the right side, if the price moves down here to what's called the neckline, this area here, and breaks through the neckline, oftentimes it will be followed by a strong downtrend in the price movement. So in this pattern, we haven't come through here yet with the right shoulder, but that's what they're looking at. That could be a potential problem. So let's go to the next chart. So this chart here from Northman Trader is essentially the same thing, the NDX, with the head and shoulder pattern, left shoulder, the head, and the right shoulder, with the price chart here, and in the upper portion is the RSI with the downtrend here and of course the uptrend in the price chart. Now this chart is from the year 2000, so Northman Trader is making the comparison to the current chart and this historical chart. So we had a problem here where we were moving on up in the price chart with the downtrending RSI indicating a potential problem if the price chart comes down here to the so-called neckline and breaks through the neckline. So let's go see the results of that. So this next chart here from Northman Trader is essentially the results of the chart that I just showed you. And here you can see that in the right shoulder, what happened was that the price deteriorated. It came down here to the neckline and of course broke below that neckline, and the rest is history. So again, we have the head and shoulders with the upward trend on the price, but the downtrend in the RSI. Now, what they're also pointing out is the coincidence of the time frame or the season that this occurred, and this was in early 2000. And here we are sitting today in early May in 2018, and we see that in May of 2000 that's when the price came down and broke through that neckline. And we are in May currently in 2018, and so the rhetorical question, what is going to happen with the current stock market, specifically the NASDAQ? So let's go to the next chart. And this chart here is essentially the FANG index made out of Facebook, Amazon, Netflix, and Google. And as you can see here, This chart from Zero Hedge is showing the same sort of head and shoulders pattern. This actually looks like a better head and shoulders pattern than the one from Northman Trader with regard to the current stock market or the NASDAQ. And again, this is just the FANG stocks. And as you can see here on the far right, and this chart is it's about a week old. So we've probably changed this chart pattern a little bit, but the question essentially when this was posed a week ago or so is what was going to happen to the FANG stocks in the coming weeks. Are the stocks going to decline? Are the prices going to decline to that neckline and break through? So let's go to my charts and I'll explain to you how I see it through my charting. And so this chart here is the 2-year weekly chart of the ONEQ, which is the Fidelity Commonwealth Trust, and it's a proxy for the NASDAQ, and it's good enough for our purposes here. So let's just go through this quickly. You can see I've already drawn here the head and shoulders pattern that we've seen before. Now, I have the advantage of an additional week, given that that article was a week old or so. So I have an additional week here of hindsight, but I think once I go through this, you'll see that that is not much of an advantage. I simply saw this set up before, and I think I can show you in some of the oscillators that I came to the conclusion that we are going to work ourselves out of this head and shoulders pattern. I believe that the probability is we will work ourselves out of it. Looking here at the MACD, we are in a downtrend. It started to slow down at this point in here. I would not have had the advantage of this last portion per se, but I think as you can see here in the MACD, the things were improving since late March, early April in this area here. So even without that extra week, it was clear that things were improving as well. We bounced on the momentum and we were heading up as well. The price rate of change, well, I would not have necessarily seen any improvement here because I wouldn't have seen this last bottom and crook there heading on up. But that doesn't really matter. That would be a mixed signal. Take a look here at the relative strength. Clearly, we bottomed here in this area and we have been improving for a few weeks or so. As well in the stochastic, we bottomed, and the fast line would not have moved through the slow line at a week ago or so, but easy enough to predict that move into the volume. Not much of an indication there. The Williams definitely bottoming here, and the improvement. Back up here to the price chart. We see this again, and as I had said earlier, I think we are going to work our way out of this. I don't see the price moving down to the neckline and moving through the neckline to cause any kind of waterfall decline in the stock. So that's how I take a look at these. I always like to take a look at some of these technical trading patterns to know what other investors and traders are looking at. But I think I have the advantage that I spend a lot more time on the other oscillators than they do in traditional technical analysis. But I think that gives me the advantage. And in my opinion, the other oscillators, that's the heart and soul of these things. So pay close attention to both the traditional technical analysis, but as well, look at those oscillators. That's the heart and soul of this NASDAQ, as well as any other index, or in my opinion, the other companies and stocks that you're taking a look at. So for today, that's ChewDog Charts. Thank you.